Hello and welcome to Taking Stock, the show where we take stock of the week gone by and prep you up for the one that's coming next. I'm Surabhi Upadhyay and with me is Anuj Singhal. Anuj, what a phenomenal week it's been for the market and, really a tale of two halves. Yes. The manner in which the bulls came charging back on the street on Thursday, then follow up on Friday. What do you make of it?
I think phenomenal move, Surabhi. And once again, you believe in the template that it's the, you buy the dips, you make a lot of money. And the markets may well have made a bottom, Surabhi, because on Thursday and Friday, you had back-to-back centuries for the Nifty, back-to-back triple centuries for the Sensex. The Bank Nifty is doing well, and it was across the board buying. On both days, you could not point, finger at one or two stocks and say that, this was the stock that was leading the market higher. All the, market favorite stocks were doing well. HDFC Bank, I think, is showing signs of turning around. HDFC is doing that. ITC also, the jury's out. Actually, we'll see whether this follow through. But clearly, big stocks making big comeback, and I think there's a good chance that the mid-cap index hits the new high maybe as soon as Monday, provided you don't have a sell-off in the Asian markets on Monday, and maybe the Nifty, Sensex and the Bank Nifty follow suit.
Oh yeah, well, what a week it's been, and there's plenty to talk about over the next 20-odd minutes. We have with us Vibhav Kapoor of Island FS as well as Manishi Raychaudhuri of BNP Paribas to help us decode the market action gone by. And we have also Ashwini Gujral, who will be joining in as always with the technical setup right now and to give you a couple of trading ideas for next week. Also, more market opinion lined up from big voices, Mark Mobius of Templeton Emerging Market Group, as well as Ramdev Agrawal of Motilal Oswal Financial Services.
Okay, joining us then on the show to discuss the week gone by is Vibhav Kapoor of Island FS, and of course Manishi Raychaudhuri is also with us. Manishi, welcome to the show. Thanks a lot for joining us. Two back-to-back solid days for the market. Do you get a sense that the uptrend is back?
First of all, this was not an isolated phenomenon in the Indian market. In fact, if I look closer home, for me, in the Hong Kong markets, both the indices HSI and HSCEI corrected more. There was possibly more vicious correction here. And that same uptrend that you're talking about, that has also commenced over the past couple of days. So it was a phenomenon across the global equity markets and possibly more accentuated in the Asian and emerging markets. There were a few reasons behind it. First, around this time, routinely institutional investors attempt to lock in their profits, even though I think it has happened slightly earlier than anyone expected this year. Second, there was a tech sell-off in the United States. At the same time, there was also a commodity price correction, particularly in the hard commodities like copper. So everything combined together, around late November and early December. So I think that is what led to this correction. These were really short-term factors which led to booking profits by institutional investors. And we are not really worried about, these short-term fluctuations in the market. Coming back to India, I think the market, in addition to looking at the fundamentals like earnings, which another season would be starting from January, the market's also looking at some of the political developments concerning the provincial elections that are coming up. So the extent of volatility-inducing news flow is possibly a little more over there.
Okay, all right, Manishi, stay on with us. We also have Vibhav Kapoor joining in the conversation now. Great to have you on the show, Vibhav. What's your sense? I mean, it's been, again, one of those sharp, shallow corrections, just about 4%, but a huge pullback in the second half of the week. What do you think is the market now smelling or sensing that triggered this kind of an up move?
So I think we're continuing with this overall uptrend in the market, and on and off, obviously, you have these corrections, which, as you rightly said, have proved to be shallow. This one seems to be similar to that. Of course, the market is looking forward to next week's Gujarat election results, and those would be important from the market's point of view. But having said that, I think the overall fundamentals and technicals in the markets, which is basically, as we've discussed earlier, a huge amount of liquidity, low interest rates, low inflation, moderate growth, expectations of improvement in earnings growth, those are what are keeping the markets up. And I think the biggest news actually of this week again really was the huge amount of inflows into domestic mutual funds, which came in at about 28,000 crores for the month of November, and that I think has perked up sentiment again. So, as long as this big inflows into mutual funds continue, I think it's very difficult to get larger and bigger corrections unless there is a big change in the fundamentals.
Oh, yes, that point is well taken, Vibhav. It's been a strong market, and what this month has told you is that people are willing to back corrections and put more money. That I think I take your point completely. So, something's got to give, right? Either the earnings catch up or the market corrects. Vibhav, do you think the former could happen in 2018? The earnings could finally catch up?
I think they are going to be better than what they were this year. That's the growth rate is going to improve. I mean, we've hardly had any growth in earnings for the last 2-3 years. So there are some signs on the ground that you will get better earnings next year. But I would still be doubtful that you are going to get what analysts are looking for or what the consensus estimate is. And as usual, you will see some degree of downgrades happening, although they may not be to the extent that we've had earlier. So we are working with earnings growth of about maybe 15 to 16% in FY19. And if that happens, and if the liquidity situation remains as good as it is now, and this Goldilocks situation in the global equity markets continues, then I think the markets will again have a decent year in 2018. Although, of course, there is one new factor which will come in, and that is the political equation, because you have a lot of state elections, and then towards the second half of the year the market will start looking at the general elections of 19. So those factors will also start to play a role as the year goes by.
Okay, Manishi, coming back to you, all these big events put aside, what is it that you like in the market right now? What is the top preference in terms of sectors?
Well, it hasn't changed much since, I was in your studio, I think about a month ago. We still focus on the auto companies. We still are focused on the private sector banks, despite the, the asset quality related restructuring that's happening in the public sector bank space. So our preference is still for the private sector banks, particularly who are retail lenders. And third, we also focus on select industrial companies, particularly those which are relatively debt-free. And secondly, the ones where actual order inflows and order execution is beginning to happen, and particularly the ones which have a very broad footprint across the infrastructure and capex universe of India. I talked about the oil and gas, particularly the refiners and the chemical manufacturers. That is another area of focus for us. I think these are the four broad silos. We have a small presence in Indian IT, but among the technology space in the entire Asian universe, I think Indian IT is our least favorite at this point of time. We like possibly North Asian, Chinese, Taiwanese, Korean technology stocks a lot more.
Okay, Vibhav, the other talking point has been the way some of these, big stocks moved this week, whether it's ITC or towards the end, or HDFC Twins, Bajaj Finance tried to make a bit of a comeback. Do you get a sense that consumption, financials, these stocks are ready for next round of rally? Maruti had a huge move, crossed 9,000 this week.
So the market is going back to its favorites most of the time. Whenever they correct a little bit, I think you get new buyers coming into these stocks, and that accounts for many of the names that you've mentioned. A lot of the when this sort of bull market happens, there is a lot of momentum buying or growth buying, whatever you may call it, which tends to take place, and people tend to buy stocks which have gone into new highs, and tend to follow the momentum. So that's why these type of markets, generally you'll find value stocks don't perform so well. They remain underperformers. And the growth and momentum stocks continue to go up. So that accounts for a large portion of why these same stocks continue to move up after every correction.
Sure. Vibhav, coming out to slightly more macro issues, sort of the next triggers for the market. There is obviously next week is going to be all about the US Fed, and I think there's 100% sort of probability right now that we will see a rate hike out there. What do you think the US markets move means for India, if anything at all? Because of late that absolute synchronized trade pattern has broken for a little bit. Even this week around, I mean, we ultimately have outperformed the US market for what it's worth.
So I think, a lot of the U.S. market movements in the last couple of weeks have been related specifically to the tax cut and the tax bills which are presently being debated in the U.S. Congress. So they are specific to the U.S. But if the U.S. markets do continue to move up in a big way, then obviously, the global markets, generally the sentiment remains good. And while the rest of the markets may not do as well, they will do well. So the trend remains the same. Of course, the interest rate hike in the U.S. is very much expected and therefore factored in by all the markets. But if U.S. interests continue to move up, and let's say the Fed indicates in its next meeting that you will have 3 or 4 increases in interest rates next year, ultimately, at some point of time, that would have a somewhat negative impact on emerging markets and could also impact the Indian markets, because they would lead to a strengthening of the dollar. The dollar has been weak in 2017, and that's been encouraging for all the emerging markets. So a very protracted or a fast increase in U.S. interest rates obviously will have some adverse impact on liquidity for the emerging markets at some point of time.
All right, Vibhav, thanks a lot for your time today. Have a good weekend.
Thank you.
That's the view from Vibhav Kapoor. Manishi, before we thank you, you spoke about it, but on gas, do you still find value in the stocks after the kind of run-up that we have seen?
Well, the gas distribution space is something we like, because I think that is where the infrastructure development and actual execution is happening at a much faster pace. We're not so bullish either on the oil and gas space as far as the explorers are concerned, because we're still concerned about the the volatility of commodity prices in that space. But as far as gas distribution goes, or as far as the oil refining and marketing companies go, we do have a positive outlook, and we do have some representation from that side in our model portfolio.
Okay. All right, Manishi, we'll leave it then on that note for now. Thanks very much for joining us on the show today. Time for a quick break, but when we come back, we'll have Ashwini Gujral joining in to answer all of your stock-specific questions and queries, as well as give you some technical ideas for next week.